Good morning, hello, and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it is the monthly expiry day, so we will be having more earnings reports, some progress of the trade deals across the globe, with the US to guide us through the trading action today as well. But yes, for the start, GIFT Nifty is suggesting a positive start for the Indian markets today. If we had to go by the global markets, how they fared, it has been quite a mixed picture. If you look at US markets, they ended on a record high note yesterday with Dow, which was up by about 300 points, and S&P 500 also at record high levels, given that investors have cheered some progress when it comes to the US-China trade talks. Of course, both officials have agreed that there is a in place, but yes, but yes, both the lead finalize the contours of the agreement, and we will be watching out more on that front as well. But yes, coming to the Asia Pacific markets, how they have fared. If you look at Nikkei, that retreated to about from record highs, given that US President Donald Trump arrived in the country, and investors will be keeping an eye out on the trade talks between the two countries as well. So yes, it's a mixed picture out there, and for us, it is the monthly expiry day, so some volatility can be expected as well. But given that it is the October series as well, which has been good, with Nifty gaining about 4%, so it's now nearing that 26,000 mark, and we'll be watching out whether it sustains through that 26,000 mark as well. So yes, stock-specific action will be continuing because we are deep into the earnings season. We'll be discussing some stocks in focus, for instance, your Mazagon Talk and others that came out with its second quarter report card. Also, we'll be taking your stock-related queries, so keep posting them on our live feed, and we'll take them shortly. But yes, before we get deeper into the show, let's look at the top headlines as well. Stocks on Wall Street start the week on a strong note as indices close on record highs on hopes of a potential trade deal between the US and China. Nvidia and other semiconductor stocks aid the rally. Asia Pacific markets failed to keep up with the Wall Street as stocks trade lower, with investors keeping an eye out for a meeting between US and Japanese leaders. Meanwhile, the GIFT Nifty is indicating a positive start for our own markets. Oil prices settle lower after OPEC plans to increase output amid renewed US sanctions on Russia. Gold, meanwhile, has slipped below $4,000 an ounce after progressive talks between US and China reduced the demand for the safe haven asset. US President Donald Trump arrives in Japan in his second stop of a diplomatic tour, meets country's new Prime Minister Sene Takachi as trade deal and defense spending test the alliance between the two. And after the Bihar elections, the Election Commission of India announces Pan-India Special Intensive Revision of Electoral Rolls. 12 states and union territories, including Tamil Nadu, Kerala, will be part of the Phase 2 of the drive. All right. If you look at the yesterday's market, of course, Nifty did, fail to sustain above that 26,000 mark. But yes, it still, has tested that. It did make that 26,000 mark in the intraday earlier in the session as well. Some of the top gainers that helped remove Nifty higher as well, that came in from the big boy Reliance Industries. Then we had Airtel, SBI, HDFC Bank, which also led the gains as well. PSU banks also did well. Among the sectoral indices, oil and gas and realty were some of the other top sectoral movers in yesterday's market. If you look at the broader end of the market, good performance came in from there, where we saw the midcap index has hit about a 52-week high. So we'll be watching out trends from the broader end of the markets in today's trading session as well. But yes, Fed rate cut hopes. Tomorrow Fed will be meeting, where we will be coming out with its rate action. Of course, it's the second last meeting of this year itself. So investors have been hoping that, given that the US came out with a softer than expected inflation report, US will be opting for a 25 bips rate cut as well. So we'll be watching out for the FOMC meeting tomorrow as well. US-China trade talks also is one of the other cue which we'll be watching out later this week as well. But yes, some of the earnings which we'll be reporting today, that is your TVS Motors, Tata Capital, Jindal Steel, CAMS. They are some of the companies that be reporting their second quarter performance. Coming to the fund flows data, where we stand as of now, FIIs, they stood as net sellers, selling stocks which was worth about 200 crore rupees in the cash markets. DII is buying stocks which was worth about 2,400 crore rupees in the cash markets itself. If you look at the Nifty put call ratio, that has climbed to about 1.07 levels from 0.76 levels in the previous session. And the stock that is retained in the F&O band, that is your SAIL and Samman Capital. Both of these counters continue to be a part of the F&O band list. But yes, sir, let's take a look at how the pre-open rates have been doing. If you look at Sensex is down about by 100 points. Nifty is also down by about points in the pre-open rates as of now. But we'll be watching out, given that it's the expiry day also, so some volatile moves can be expected from the headline indices. But yes, with that, let's quickly get on board with our technical expert of the show. Joining me is Ajit Mishra, Senior Vice President Research at Religare Broking. Ajit, good morning. Yesterday we weren't able to sustain that 26,000 mark at close, but still we are near it. And what is the next level that we can watch out for?
Yeah, good morning, Lovisha. So, Lovisha, if you see that last week, the final two sessions, we were seeing a bit of a profit taking. We started this week on a strong note, and this clearly indicates that after this strong move that we saw from the recent bottom, it's a healthy consolidation that we are currently seeing before we march towards a new record high. So, as long as positionally we are holding about 25,600 mark, it's a buy and dip market. Intraday, because we have this monthly expiry, obviously the volatility is likely to remain high, and we broadly expect this consolidation to continue with the bias on the positive side. So for the intraday traders, any dip towards 25, 850, 720 zone is the area basically where one can look for long trades, with 26,000, 26,100 being the first area of resistance and 26,200 being the critical hurdle. Banking, which is supporting from the front, then we have almost all the other sectors which are also pitching in. IT was slightly in the back foot earlier, and now we are seeing stability post the numbers. So we feel that majority of the sector on traditional basis are helping the markets to maintain the positive tone. But yes, the challenge lies more with the broader indices. Though we are seeing that the broader indices are also inching higher, but the participation is limited. So in cash market, at least one should be slightly cautious. Otherwise, the preference should be given to large cap and larger mid cap names, during this market consolidation.
Okay. Ajit, if you look at the PSU banks, they were quite a stellar performance yesterday. So what do you make of the moves? And of course, for the Nifty Bank Index also, what are the levels you want to point out here?
Yes, so if we're talking about the Nifty Bank, 58,500 to 59,000 will be the area of resistance, and closer to around 5750, 650 is something that one can look for long positions. And as you rightly mentioned, that PSU banks this time around during this up move is outperforming by big margins, and we expect this outperformance because majority of the names, from the PSU baskets, barring few, are participating strongly, and we expect this momentum to continue. So basically, stock like Canara Bank, SBI, Bank of Baroda, these are some of the names that should be on your radar. We still feel that we have decent potential of roughly around 4 to 5% from the current levels as well.
Okay. Let's also talk about Nifty Realty Index, one of the top sectoral performers yesterday, Ajit. But even if you look at the past 1 month and this month itself, for the month of October, Nifty Realty Index has done quite well. 9% gains came in from the index. What can we watch out here? And of course, any picks that you have from the realty space?
Yes, so in fact, realty as a basket also we have started seeing decent traction post this almost 1.5 month of consolidation below the major averages. So across the board, in fact, we are seeing participation. That is a good part. Means DLF from the large cap names, and then we have Oberoi Realty, Godrej Property, wherein we are seeing traction. So preference should be given to the performers. So basically, Prestige State is also one such name, wherein we are seeing outperformance. The stock is almost closer to its previous swing high. So 1800 is what we are eyeing as a immediate hurdle. The moment we cross this, then probably we are set for the new record highs, means 2000 plus area. So one can start accumulating even at current levels in the range of 1750 to 1800, with stop at 1700 and upside potential of 2000 levels.
Okay, all right. Now the Now that we have discussed about sectors, let's move on to some individual movers also. Yesterday, we did see that Mazagaon Dock came out with its second quarter performance, wherein the net profit is up by about 28% on a year-on-year basis. Revenue has grown by about 6% on a year-on-year basis. EBITDA has surged by about 36%, and margins have also seen a sharp improvement of about 500 basis points. Ajit, coming back to you, the stock has of course been consolidating right now. But what can we watch out the next moves to be? Because we've come out with a good second quarter performance.
Right. So if you see, Lovisha, that the defense pack is largely consolidating, wherein BEL is leading from the front. Then we have some of these stocks like HAL, Majgaon. They are consolidating in a range. For Majgaon specifically, we are currently struggling to cross the first barrier around 2850, which coincides with the multiple moving averages. So a trader should wait for a decisive break, when it comes to the fresh position, and then we may see next leg of the up move towards 3050, 3100 mark. For those who are existingly maintaining long, 2700 is the immediate base where the long-term averages are placed. So as of now, it's a hold, but for fresh buying, one should wait for a break above 2850 mark.
Okay, 2850 mark. That is what we need to watch out for. All right, let's discuss about the another stock in focus. That is your Adani Energy. Where, of course, it was a mixed set of performance that came in for the company. Profit fell about 21% on a year-on-year basis in the second quarter. Revenue has risen by about 7%. Ajit, what do you make of the stock? The stock has surged, however, 8% in the past 1 month. Can we expect the trend to continue?
So we are very close to the resistance mark. See, 960.65 is the previous swing high, and broadly, if you see that within the Adani group of stocks, it has not performed, at par with the majority of the strong performing names. So one should be slightly cautious for fresh positions, and for those who are holding longs, utilize this recovery to reduce your position. In the interim, do maintain a stop at 920 because a break below this level may trigger again some profit taking.
Okay, all right. Some break below the level may take profit booking. Let's take another stock in focus. That is your Indus Towers, because that also came out with its second quarter performance yesterday, where the net profit has dropped by about 17% on a year-on-year basis. Revenue has risen by about 10% on a year-on-year basis. But yes, Ajit, how do you see the stock on the chart for Indus Towers?
So after this sharp decline from 430 to 310, there was almost like month and a half long consolidation phase, and finally yesterday it was a decisive breakout with volumes. When it comes to this, daily charts. So this indicates a possibility of further rebound towards, let's say, 385 to 390 levels as a immediate target, and then positionally it might in fact inch toward 410 also. So yes, you can continue to stay put with 360 as a stop loss.
Okay, 360 as a stop loss. Of course, let's take the opening rates on the screen for you. Of course, it's a quiet start for the markets. If you look at Nifty, it's opened up above that 25,950 mark. However, it fell flat with a positive bias. If you look at Sensex, it's a quiet start for there as well. Midcap index after yesterday's 52-week high, you can see has opened up flat with a positive bias as well. So all in all, it's a very quiet start for the markets. Given that we also had a mixed cues that came in from the global front. We did see that the US markets were at record highs, but Asia Pacific markets have seen a negative reaction because the investors are still watching out for some trade developments that is coming in from both US and Japan as well. But yes, coming back to our markets, if you look at the majority of the sectoral indices, India Wix has jumped up by about 2%. Of course, it's the monthly expiry day also, so we can see some muted moves in the markets as well. But yes, coming to the broader end of the markets, mid caps have opened with about 0.1% gains, small caps with about nearly 0.3% gain coming in for there. Bank Nifty has opened also with a flat with a positive bias. All in all, it's a very mild moving market as of now. FMCG index with about 0.1% gains. If you look at Nifty Metal Index, that has opened up in the negative territory. Nifty Private Banks also in the negative territory. And if you look at, like we were discussing about Nifty Realty Index, yesterday we did see that it was one of the top sectoral performers. Today it's seeing some bit of a profit booking, 0.2% declines coming in from there as well. Nifty Auto Index has also opened up with about 0.1% gains as of now. But yes, let's take a look at some of the top gainers and movers on the Nifty. If you look at the gainers list, you can see SBI doing quite well, 0.8% gains coming in from there as well. Tata Steel, Titan, Tata Consumer Products, some of the other gainers on the Nifty 50. L&T, Bajaj Finserv also seems to be doing well with about 0.3% gain. But yes, all of these stocks are showing some bit of a mild moves, and we'll be watching out how they pan out in the second half of the trading session as well. Coming to the top losers, of course, we can see that some of the financial names have taken a backseat in today's trading session. Axis Bank, ICICI Bank, both of them seeing a decline of about 0.5% as of now. Asian Paints, ONGC, Shriram Finance, some of the other losers on the Nifty 50 as well. So yes, all in all, it's a very quiet start for the markets. Given that's also the monthly expiry day. So yes, we'll be watching out more moves on this front. But yes, let's discuss about one particular stock in focus. That is your Sona BLW. It came out with its good set of performance when it comes to the second quarter. The stock is also showing decent moves with about 1% gains. It did see about highest ever quarterly financial results for the second quarter. From the revenue perspective, the company has reported about 24% year-on-year increase, alongside a 13% increase in EBITDA and 20% surge in net profit as well. And brokerages have also remained quite bullish on the counter. If you look at CLSA, they've given an outperform call on the counter. They believe that the EBITDA margin was about 228 basis points higher than what the street was estimating. And revenue has also increased by about 24%, while BEVE revenue has declined by about 17% on a year-on-year basis. Nomura has also given out a buy call on the counter, and they've raised the target price, given that they believe that the second quarter revenue was beat, led by the railway and traction motor as well. But yes, coming back to you, Ajit, on Sona BLW, we've seen good moves from the past 1 month. Also, stock is up by about 21%.
Yeah, so we are seeing recovery, Lovisha, because post this recent decline, we were almost closer to the 52 weeks low, close to around 400 mark. And after retesting that mark, we have seen a decent recovery, a steady recovery. In fact, in today's session, we are seeing an attempt to reclaim the long-term averages, which is a good sign. Charts indicates a possibility of bit of consolidation before the next leg of the up move. So for those who are holding longs, it's time at least to book partial profit in case if you bought it at the lower levels. And for fresh entry, let the stock consolidate in this range 480 to 500 for the next leg of the up move.
Okay, all right. That is the view coming in for Sona BLW. Let's discuss about another stock in focus. That is your Dilip Bilcon, 1% gains that is coming in for the counter as well. Dilip Bilcon, any views on the counter, Ajit?
So it's highly volatile, Lovisha, because last time, from 450 to 580, it was almost a vertical rise, and then the decline was equally sharp. So I feel that one should refrain from any fresh long position until we see some stability in the price move. So as of now, it seems like that 470 to 490 could be the range that the stock might continue to hover in. And the moment, let's say we stabilize above 500, then probably we can see a gradual up move in the stock towards 525, 530 area. So as of now, it's an avoid, but for those who are holding long, 480 should be their immediate stop.
Okay, all right. Let's take another stock in focus. JK Tyre seeing some good traction in today's trading session. 5% gains coming in for the counter after it came out with its September quarter results, where the profit has risen by about 64% on a year-on-year basis, and revenue has also seen a good growth. Ajit, coming back to you, JK Tyre's good moves coming in for there as well. Can it continue its performance?
So Lovisha, in fact, we have started seeing this traction for almost 1.5 months from 350 to 440 is something that we have already tested. So it's time at least one should book 50-60% of the profit existing position and maintain a trailing stop at 420. On the higher side, let's say in case if we manage to hold this 445 barrier, then probably we can see 470, 475 levels also. But charts are indicating there is a possibility of profit taking. So prudent approach is to at least book 50%.
Okay, all right. Prudent approach is to book 50% of the profits on JK Tyre. Let's take another stock in focus. Bata India not reacting well to its second quarter performance. The stock is seeing a sharp negative reaction, 6% decline coming in for the counter, when we did see that the profit has sunk by about 74% on a year-on-year basis. Revenue has also dropped by about 4% on a year-on-year basis. Of course, Ajit, the stock has been an underperformer, but how much of a downside can we forecast from here on?
So Lavisha, it's been almost 4 years now that we are seeing this kind of gradual and steady decline, and multiple attempts were made to reclaim the critical resistance area, but every time the sellers takes the control, and this time around also we feel that possibility of retesting the previous 52-week low close to around 1020, seems high. So in case by any chance if you have any existing long positions, the prudent approach is to take the losses and switch to the counters or sectors which are performing or trading in sync with the market trend.
Okay, all right. Let's take some of the viewer queries that is dropping on our live feed. With the first query coming in from Naveen, he's asking the view on Bharti Airtel. The stock has seen good moves in the past 1 month as well. But yes, Ajit, what is the next level that we can watch out for Bharti Airtel?
So a very steady performance in the telecom basket, Lavisha, and in fact we have seen a fresh breakout of late. And as per the pattern, the possibility of testing 2150, 2200 mark seems high. So definitely it should stay put. And now on the trailing basis, the stop should be at 2020.
Okay, 2020 for the stop loss for Bharti Airtel. Let's take another viewer query. Naveen is also asking the view on Bharat Electronics on how the counter looks like. Of course, from so far this year, the stock has been an outperformer, 40% gains. But yes, what can we expect the next target level to be for Bharat Electronics, Ajit?
So among the defense counter, it is definitely among the top performing name, and still is holding above the short term averages. Though we are seeing a bit of a profit taking at the higher end, which is normal because we were very close to the record highs area. So 410 is the immediate stop for the existing long position, and one can in fact look for fresh longs also. And 428, 430, that should be the positional targets.
Okay, all right. That is the view coming in for the counter, Bharat Electronics. Today, however, the stock is down with about 0.2% decline as of now. But yes, let's move on and talk about another viewer query. We have NS who's been asking the view on M&M. He's saying that at 33% profit should be booked or hold. And if we need to exit, then can you suggest another stock which is there in the auto sector? Ajit, for M&M, what would you suggest? Is it a time to book profits at this point of time? Because past 1 month has been also quite good, and this year also it has seen quite an uptrend.
So yes, it's among the top performing name when it comes to the IoT auto basket. It's trading closer to its record highs. Marginal consolidation every now and then is healthy as long as we are maintaining the positive trend. So I don't see any reason of exiting this position at current levels. In fact, one can continue to stay put. Now this 3500 is the immediate support area, so that should be your trailing stop loss. And a close above 3700 can trigger the next leg of the up move towards 4000 levels also. So keep on trailing your stop losses on rise, and as of now 3500 should be your stop.
Okay, all right. 3500 should be the stop loss. Let's take another viewer query. We have Satvika who's been asking on Usha Martin for a 1 year perspective. Ajit, Usha Martin, of course, the stock has seen a steady rise from 400 levels to 450. That is where we are at as of now for Usha Martin. And today also the stock is seeing about flat with a positive bias. But yes, from a target levels, what can she watch out for?
So yes, it's among the top performing name, in the mid cap and small cap basket. And as per the long term charts, possibility of inching towards let's say 500, 520 seems high. So she should definitely stay put. 430 on the closing, this should be the stop loss, considering that slightly volatile counters and mid cap and small cap. Also, we are not seeing a decisive trend yet. Means the participation is there, but slightly selective. And Usha Martin is among the top performing names, so definitely she should stay put with 430 as a stop.
Okay, all right. Stay put with 430 as a stop loss for Usha Martin. Let's take another viewer query. We have Alex who's been asking the view on Avas Finances for a fresh entry for a long-term perspective in the housing sector. Ajit, coming back to you on Avas Finances, of course, so far this year the stock has seen a flat move. But yes, is this a time for a fresh entry in the counter?
When it comes to this housing finance names, especially in the affordable space, we have had multiple occasions where the stock tried to witness some traction, but it couldn't sustain. So yes, the downside seems capped because 1500, 1400 is basically the area where we have multiple bases, and every time when we see the stock inching towards that area, the buying interest emerge. But at the same time, the momentum is missing, and we might see the same the moment we see a decisive close above 1800 mark on the weekly basis. So as of now, it's looked slightly more on consolidation side. So if you are okay with the 1 year, 2 year kind of a time horizon, you can start accumulating at current levels. And but for the momentum, we need a close above 1800 mark.
Okay, all right. For a momentum, 1800 is something that we need to watch out for Avas Finances. All right, let's take another stock in focus. That is your Raymond. After it came out with its second quarter performance, the stock is its stock has declined by about 1% in today's trading session. After we did see that the profit has tumbled by about 76% on a year-on-year basis, and revenue meanwhile has grown by about 11% on a year-on-year basis. But as Ajit, the stock has declined nearly 2% decline coming in for Raymond. What can the next moves be?
See, consolidation with the negative bias is more likely because the stock is now trading below its long-term averages. It's been almost like 15, 20 sessions that it's struggling to cross that barrier around 600 mark. And on downside, 565 is something that is holding strongly. In case if it breaks this level, then probably we are set for 540, 520 levels also. So please avoid any fresh long position. In case if you have any existing trades also, 565 should be a strict stop loss. On the higher side, the momentum would change, or the bias would change once we decisively reclaim 610. So as of now, it's an avoid for fresh position. Existing position 565 should be a strict stop.
Okay, all right. That's the view coming in for the counter. Raymond, today the stock is down by about 2%. Let's move on and talk about Tamil Nadu Mercantile Bank. The stock is seeing some good moves, 4% gains coming in for the counter after the company reported a good set of numbers from the September quarter. Profit has risen by about 4% on a year-on-year basis. NII has also increased by about 0.2% on a year-on-year basis. Asset quality has seen a bit of an improvement, and that is why you can see the counter doing well in today's trading session. Ajit, of course, this month only we have seen that the stock has seen quite a breakout. What can we expect? An extension of the same?
So yes, it's been almost 4-5 months of underperformance, and now we are seeing strong traction in this week. So far, it's up by around 7%. So we can see this recovery continuing towards 500, maybe higher. So as of now, yes, you can continue to hold your longs. 470 on the trailing basis, or for the fresh long position is also something one can maintain. And around 500, one should review the position again.
Okay, all right. Let's take another viewer query on that note. We have NS who's been asking the view on Sirma SGS and whether it can be bought at the current market price. The stock is seeing good moves today, Ajit. 2% gains coming in for the counter. But yes, so far this year, the stock has also been an outperformer. Would you suggest him to buy at the current market price?
So it seems like that post this consolidation around the record highs, there was marginal profit taking, but the stock is again trying to reclaim the short-term averages, which is a good sign. But for confirmation, we need a close above 795. So as of now, one should avoid any fresh long position, because in case if it fails to hold this area, then probably we are set for 720 or maybe lower. So as of now, one should wait for a close above 795 for any fresh long positions.
Okay, or any fresh long position one needs to wait out for a Sirma SGS. Let's take another viewer query. On that note, we have RP Kar who's been asking the view on Hindustan Unilever on how the counter looks like on the charts. Of course, we did see that the HUL did report a mixed set of performance when it comes to second quarter, and that is what weighed on the performance in last week as well, where the profit slipped by about 6% on a year-on-year basis. Revenue also saw a drop, and the GST cut was a big impact to the margins as well. That is why what weighed the sentiment in the counter as well. But yes, the management is hopeful for the second half of the financial year, and we'll be watching out more moves from that as well. But yes, Ajit, HUL as a counter, how does it look like on the charts?
So Lovisha, in fact, among the sectors, only FMCG I feel is slightly lagging behind during this run, and for the obvious reason, because some of these stocks like HUL, wherein we are seeing profit taking post numbers, but the trend has not reversed yet. Means we are likely to over in this range of 2450 and 2640, at least in the near future. So in case if you have any existing position, you may consider exiting and switching to the performers from the metal, auto, or banking space. And in case if your view is long term, you can definitely stay put.
Okay, all right. You're coming in for HUL. Stay put for the counter. Let's take another viewer query. We have Advait Joshi, who's asking the view on RBL Bank from a long-term perspective. Of course, the stock has seen a good uptrend when it comes to in the past 1 month as well, and from a year to date perspective as well. Ajit, 200 to 300 levels, and right now he's asking what's the long-term perspective looking like for the counter.
So RBL Bank post this recent development, on the stake sale, and since then we are seeing that the stock is inching gradually higher. Now we are trading closer to the 52-week high as well. So one can definitely consider accumulating in case if you're planning any fresh trades also in this range of 300 to 320. And gradually we can see the stock inching towards 355 380 levels if the view is long term. So yes, it's positive counters to invest in, and 380 to 400 positionally is what we are eyeing as a target zone.
Okay. Let's take another viewer query. We have NS who's been asking the view on Lemon Tree Hotels and whether a fresh entry at the current market price is advisable for the counter. Lemon Tree, Ajit, the stock has been consolidating at that higher range of about 170 to 180. What would you expect him to do at this point of time?
So, interestingly, the stock from the hotel sectors, we are seeing mixed trend, while Lemon Tree is, maintaining the positive bias so far. So, yes, one can consider creating long even at current levels. Now, 158 is the area basically where we have multiple supports. So, with that as a stop loss, you can start accumulating at current levels, and the first target should be at around 180 and then 200.
Let's take one stock buzzing, that is your Sai Silks. The stock is seeing a good breakout today as well, given that it came out with its good set of second quarter performance, where profit has spiked by about 68% on a year-on-year basis. Revenue has also risen by about 28% on a year-on-year basis. Ajit, what would your recommendation be for Sai Silks? The stock is seeing good moves today.
So Sai Silk, Lovisha, I feel that the stock is not available on NSE because Sai Life is something that I can see on my screen. So can you please help me with the symbol?
It's Kalamandir stock.
Kalamandir.
Yes. SSKI. Yeah.
Yeah. So Kalamandir, yes. So strong traction, upbeat volumes. So everything is aligned. Means it's been almost like 5 months of consolidation which has finally ended, and the price action volume indicates this momentum to further continue towards 230-35 levels. So yes, you can continue to hold your longs with the trailing stop at 205.
Okay, all right. The stock is also seeing some good moves, and we'll be watching out for more for Sai Silks as well. All right, let's take another viewer query. We have Geetu Sandesh who's been asking the view on Satvik Green Energy from a long-term perspective on how the counter looks like. Of course, the stock is seeing some good moves today, 2% gains coming in for the counter. But yes, she's asking, how does it look like from a long-term perspective? 1 month itself, if you look at Satvik Green Energy, 11% gains coming in for the
so it's more of consolidation that we are seeing in the stock. So as of now, one should avoid any aggressive positions. But yes, in case if you have any existing longs, you can continue.
Ajit, would you have the data to say? The net loss has narrowed to about 10 crore rupees versus a loss of 11 crore rupees in the earlier quarter, in the earlier year ago period as well. Revenue has risen by about 11% on a year-on-year basis as well. However, the stock is not appreciating the results. We can see nearly a percent decline coming in for the counter as well. But yes, coming back to you, Ajit, Mahindra Logistics, how does it look like on the charts?
Mahindra Logistics, yeah. So it's more of consolidation, Lovisha, and this zone 340 is critical because in case if it breaks this area, then probably we are set for the further correction towards 320 levels. So as of now, you can continue to stay put, but 340 should be your strict stop loss. On higher side, we need decisive close above 370 to regain momentum.
Okay, all right. All right, just one last question before we let you go, Ajit. What are your top picks? I know we discussed a range of the stocks, but anything that you're watching out?
Yeah, so Ashok Leyland, Lovisha from the Auto Pack is something that we like. After this marginal profit taking, the stock is again, buzzing, and we are seeing strong traction. The stock has reclaimed the short-term averages, so everything looks positive. And near-term 152 is what we are eyeing as a target area. So with stop at 136, you can go long in Ashok Leyland. From the PSU banking basket, which is leading from the front within the uh, banking space also, Canara Bank is something that we like. So after retesting its short-term averages, here also we are seeing strong rebound. So we believe 136 is something that the stock might test in the near future. So with stop at 124, Canara Bank can also be considered for fresh long positions.
Okay, Ashok Leyland and Canara Bank. These are the two stocks that we need to watch out for. All right, with that, we have to let you go, Ajit. But thank you so much for your time and connecting with us.
Thank you.
All right, let's take a look at how the markets have been faring at this point of time. If you look at Sensex, it is up by about 100 points. Of course, we did start on a quiet note, but if you look at Nifty also, it is above that 26,000 mark as of now. So yes, it has been a quiet start for the markets, but all in all, it has been a good pickup from there as well. If you look at sectoral indices, how they have been faring at this point of time, Bank Nifty index still continues to trade flat with a positive bias as of now. Broader end of the markets continue to remain flat. Mid caps with about 0.1% gains. Small caps also showcasing gains of about 0.3%. On the other hand, from a sectoral indices, Nifty Auto Index is seeing gains of about 0.3%. Metal Index showcasing a larger gain of about 0.7% as of now. PSU banks doing well once again in today's trading session. 1% gains coming in for the index as well. However, if you look at on the flip side, Nifty Realty is something which is taking a bit of a profit booking. 0.4% decline coming in for the Nifty Realty index as well. On the other hand, if you look at Nifty Pharma index, that is also seeing some mild moves of about 0.2%. And on the other hand, if you look at the Nifty IT index, also showcasing a decline of about, it's flat with a positive, negative bias as of now. So all in all, it's a very quiet set of markets when it comes to sectoral perspective. However, from a headline perspective, we can see that Nifty has once again reclaimed that 26,000 levels as of now. But whether or not Nifty actually sustains below that 26,000 mark is something that we'll be watching out in the second half of the trading session also, given it's the monthly expiry day, so some volatile moves can be expected from the markets as well. So yes, all in all, it's a quiet start for the markets. But yes, this week we have started off on a good note. We have some cues which we'll be watching out for later in the week as well. U.S. Federal Reserve meeting which will be coming out tomorrow. The street is estimating for a 25 basis point rate cut following a cooler than expected inflation report that came in from US as well, and a stable unemployment rate as well. That is why the street has been estimating that the Fed might choose for a rate cut this time as well. So FOMC meeting, and then we have some trade developments that is coming in from US as well, given that the US president has been on its diplomatic tour. Earlier, we did see some trade deals that came in from Thailand, Malaysia as well, and now right now he's in Japan, and we'll be watching out for more moves as well. Japan, and then he'll be also moving on to China. So yes, we'll be watching out for those moves as well. But yes, let's once again introduce you to our Money Control Super Pro. Which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI registered experts, pre identified chart patterns, and AI powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So, Super Pro is where the serious investors can stay ahead. You can download the Money Control app and subscribe to Super Pro. All right, with that, let's quickly move on to our next guest of the show. We have Mayuresh Joshi, Director of Research at Market Smith India joining us to help us morning. It's once again reclaimed that 26,000 level, and now the street is on a wait and watch place.
Morning, Lovisha. No, absolutely. I think the markets are now watching out for the next turn of events. What probably happens in terms of the tariff resolution to begin with. You already had some element of market news that was getting circulated. And therefore, I think if there is any positive resolution on this front, the markets will take it with both hands. At the same time, I think the result season is on us. And therefore, I think results have been encouraging so far. And with expectations of all macro developments, specifically in terms of GST rationalization and consumption plus capex expected to pick up steam in the second half, it seems earnings can make a very decent and a strong comeback as we head into the second half. So I think selectively, certain sectors, certain stocks can continue doing well as earnings start improving over the next few months and next few quarters.
Okay. Mayuresh, but what are you making of the second quarter earnings so far, at least, and outline some of the hit and misses and the outlook ahead for the upcoming quarters?
I think so far very reasonable. So I think if you probably look at banks, Lovisha, I think banks have given a very decent performance so far. Again, I think the kind of adjustment that will probably happen in terms of both the deposit and lending rates, NIM should start stabilizing as we head into the second half. Obviously, I think a lot of managements have hinted to better advances growth. But I think deposit growth should also be reasonably strong, specifically for the PSU banking universe. At the same time, the kind of provisioning that a lot of banks have done, whether it's large cap private banks, the mid cap private plus PSU banks, I think it seems to be very encouraging that asset quality pressures have remained very, very decent so far. And therefore, I think banks have given a decent show in this season. As far as IT is concerned, large cap IT more or less in line with expectation, expected to be relatively soft, both in terms of numbers as well as commentaries. But I think mid cap IT again has outperformed, both in terms of numbers delivery as well as the expectations that one really had on management perceptions. So the commentary was relatively stronger for mid cap IT companies, and the base case scenario, the presumption underpinning the expectations of second half growth expected to remain relatively stable and strong. Plus a lot of AI initiatives that a lot of these mid-cap IT companies are doing have held off. FMCG, relatively better. So I think Nestle had a very good set of numbers. HUL's commentary was very, very positive. And therefore, I think GST rationalization is expected to boost volume and value-led growth, specifically in the next 2 quarters. And after that, I think a little bit more structural. I think the numbers as far as the base effect, at least sequentially, might actually be on the high side. But again, next 2 quarters, FMCG companies might have reasonable growth. The autos can sustain, and that is what is probably being seen in terms of monthly numbers. And therefore, I think earnings season so far has been relatively better. Our own expectations are that in the second half, it should have relatively better showing. It is always an expectation, Lovisha, that the second half always gets built up with large hopes. But this time, with a lot of triggers playing out, I think the second half will truly turn out to be something where earnings might actually hold up better than the first.
Okay. Mayuresh, you did mention that, now that there is some bit of a resilience that is coming from the earnings front as well. And now we have US President Donald Trump also on a diplomatic tour. We had Piyush also saying that the final contours of the trade deal could be out soon as well. We are finally progressing towards India-US trade talks. So finally, that one puzzle piece, do you think that is also getting solved?
So Trump is highly unpredictable, Lovisha. So I think what probably happens is something to be watched out for. But I think so far, if there is a resolution, and again, a resolution not just with India, but also with China, I think that allays a lot of fears, both on the domestic as well as the global front, which is very, very positive in terms of a lot of corporate earnings, which are export-oriented. So I think export-oriented sectors are the sectors which are probably creating a drag in terms of the overall EPS growth and EPS estimates. Not just for the index, but for specific broader markets. So sectors like gems and jewelry as an example, textiles as an example, shrimp feed manufacturers as an example. And therefore, any resolution on this front will obviously be positive for these export-oriented sectors as well. And a few of the export-oriented sectors on the index where earnings become a drag. At the same time, I think if a global resolution also happens with China, I think there is huge hope in terms of a lot of resolution happening as far as the metal space is concerned, as an example, as well as that starts coming back with growth and demand dynamics expected to come back slowly and steadily. On the flip side, I think with the tariff impositions that have probably happened, what happens to the US in terms of demand dynamics and the rest of the globe in terms of GDP estimates is something to be watched out for. Does that stagnate their economies a tad bit? Is to be seen, and therefore a comparison will then be drawn. How India will probably fare on all these aspects, which will be relatively better, in my opinion. Also, let's not forget that we are trying to strive for a deal with the Eurozone as well. And if that probably comes through, I think that also will be something which will be positively taken up as far as the export-oriented sectors are concerned, which basically probably covers a large part of the universe that I just discussed.
Okay, okay, all right. Mayuresh, coming back to your consumption point, we have seen a decent rally when it comes to the discretionary space. Autos, consumer durables, they've seen a good rally after the GST cuts have been announced. But do you think that the positives have mostly been priced in, and now much of the onus will be on the second half of the fiscal year in terms of earnings performance comes out for the street?
So you're absolutely right. I think a large part of the price move has happened, and therefore I think the markets are penciling in a very strong earnings growth in the second half. As I said, I think in Q3, Q4, I think a lot of these discretionary oriented and facing sectors, including FMCG, including consumer durables, including autos, including auto ancillaries, hotel stocks as an example, might show a very strong comeback. And that might be very, very evident in terms of Q3, Q4 numbers. And therefore, I think the positive aspects that these sectors might throw out as far as numbers are concerned, in spite of a global scenario where tariffs are still uncertain across the globe, and as I just elucidated, I think what kind of an impact that have on the US and the other economies as far as corporate earnings are concerned, whether it's a very sticky for Q3, Q4. I think a few of these domestic-oriented sectors might actually sustain earnings growth going forward, and therefore I think the positive momentum might sustain for leadership stocks within this sector. Obviously, there are going to be a few outliers within these sectors as well, where earnings are going to hold up very, very strongly, which might get reflected very, very positively in price. So yeah, I think we remain optimistic on consumer-oriented and consumer discretionary sectors.
Okay. Mayuresh, coming back to your IT point where you mentioned that you're quite optimistic on the mid-cap IT firms. But when it comes to large caps, do you think that the caution is still warranted? Of course, we did see some large cap names coming out with their AI plans as well. But is it early to be optimistic about it?
So I think if you have a valuation stack up done for large and mid-cap IT companies obviously are a tad bit more expensive, and the kind of premium valuations are coming on the back of strong earnings growth that they are posting. So I think any miss in terms of any earnings growth estimates or delivery, either in Q3, Q4, I mean, you might just see sharp profit booking. So it will be very, very selective, though mid-cap IT has remained extremely strong and resilient. Large cap IT relatively better in terms of valuations at this juncture compared to the standard 5-year standard deviations and mean averages. However, I think the entire business model in terms of competition intensity as far as AI is concerned, upskilling of their employees, whether pricing for large deals remains circumspect in terms of margins as well, and utilization levels across employee bench strength is something to be watched out for. So my own sense is that even if valuations are in favor of large cap IT companies, I think the earnings delivery and momentum might just be a little bit on the softer side. And obviously, I think global conditions will determine Q3, Q4 numbers as well. Obviously, Q3, Q4 will also have a lot of furloughs as far as Christmas holidays are concerned. Then the discretionary budget spending, which comes up in Q4. And some of the companies probably also need to probably have their salaries, which need to be accounted for in this quarter and the next quarter as well. And I think valuations very much in favor for large cap IT companies, but earnings might still remain a little bit volatile. And therefore, I think mid cap might actually sustain those premium valuations on the back of sustained earnings growth.
Okay, okay, all right. All right, Mayuresh, now that you have pointed out some sectors where there is some resilience, anything that you're cautious about?
No, so largely, I think metals as a space, you still need to be a little bit more selective. I think it's obviously, as I said, will be based on two factors: resolution of tariffs when it comes to China, And second, I think how global demand dynamics are shaping up, because ultimately, I think China's demand supply dynamics will have a say in terms of how global LME prices are probably positioned. And therefore, I think uh, metals as a pack need to be a little bit selective or cautious at this juncture, wait for signs to probably show up. A few of the domestic oriented metal stroke energy companies, in my opinion, can still continue doing well. Second, as I said, within IT, large cap IT, you need to be a little bit cautious and have that on your watch list on how the performance is expected to be, how global macros are shaping up. And therefore, I think need to probably monitor whether any developments are taking place selectively for large cap IT stocks, even though conditions remain favorable. So I think keep these two sectors on your watch list in terms of developments. And if very positive developments happen, considering all the risk factors that the markets are already penciling in for both these sectors, certain stocks might start delivering as Q4 starts coming through. But Q3 largely will be something where you probably need to observe both these sectors very, very closely.
Okay, all right. All right, Mayuresh, with that, we have to let you go. But thank you so much for your time and hope that we connect with you soon.
Sure. Thanks. Thanks. It's always a pleasure to be on the show.
Let's take a quick check of the markets of where we are at. Nifty is still above that 26,000 mark, 0.1% gains coming in. However, it's off from its day's high level as of now. If you look at the broader end of the markets, mixed hues coming in from there as well. However, the small caps have been outperforming with about 0.3% gains. On the sectoral perspective, Nifty autos have taken an upper hand with about 0.5% gains. And like I was talking about, the Nifty Realty Index, however, that has seen a bit of a profit booking, 0.1% decline, 0.8% decline coming in from the Nifty Realty basket. On the other hand, if you look at Nifty Metals Index, that is soaring in the trade with about 1% gains, and it is one of the top sectoral movers of the day as well. But yes, all in all, the markets are looking stable right now. However, Sensex and Nifty, both of them remain quite volatile given it's the monthly expiry day. So we'll be watching out how the second half of the session also looks like at this point of time. But yes, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we'll understand how the market has developed and what the stocks were there that grabbed the headline. Until then, signing off. Do stay tuned to moneycontrol.com for all the news updates and market insights.